This video might be the most helpful for first-time home buyers, but really there's going to be gold nuggets for anyone that's buying a home in 2024. Of course, my region is Southern Missouri, so some of the analytics are going to be specific to this region, but really what I'm going to talk about pretty much can go for any area that has a healthy real estate market. Anyone that tries to tell you what the real estate market is on a national level is missing a lot of pictures, because really we have some markets that are at still a standstill and then other markets that are pretty healthy. And that has to do, of course, with migration, immigration, economies, just so many things. So yeah, today what we're gonna do is we're gonna look at 5 important considerations when buying a home in 2024, particularly in Southern Missouri. Moving to Southern Missouri is the best thing I've ever done for my family. Have you heard about low inventory? Because it's getting crazy. 2023, a lot of people were saying that inventory levels were at about 50% of, normal averages. There are some markets that are showing more like 30% inventory of what the usual average is. So that unfortunately is going to probably continue through 2024. Now, with interest rates getting more favorable, which we're about to talk about, it is theoretical that we're going to see a lot more people trading up, a lot of people, selling their home that at the time last year didn't feel like they wanted to because of the interest rates. But a lot of these people statistically are going to be trading up or trading home. So it doesn't actually change inventory levels significantly, if at all, because they sell a home and they buy a home. Right? So as you can see, that really doesn't bring an influx of inventory. I mean, we will have, spurts of inventory, but it's going to sell just as quickly, leaving us with just a handful of homes in each area. So that is going to continue through 2024 and definitely is going to affect the buyer. The second consideration I want to bring up for buyers in 2024 is that particularly in Southern Missouri, demand is going to continue to grow at a pretty rapid pace. There's been some analytics, it's like over the next 5 years, the majority of counties, except for 2, actually Texas and Ozark County, tracking to stay about the same population-wise, while the other counties in Southern Missouri are just booming. Like Christian County is gonna double its population, which is wild. It's actually like the fastest, like per capita, it's like the fastest growing county. So that is going to continue. Now, that is really good. Probably one of the main factors that's gonna really shape regional real estate markets is where people are moving to, where are people moving from, what are the states and the areas that people just cannot wait to get away from. I'm not going to name any. I'm just saying there's some places that people are still flocking from. And Southern Missouri is definitely one of the locations that people are flocking to. What's really neat is that I believe what I'm seeing for the most part are people really of a similar mindset that are moving, a lot of people moving for the right reasons, wanting less of a government stranglehold on their lives, wanting to be able to really prosper as maybe an entrepreneur, where before in another state, just taxation was strangling their business. All of those things are really bringing a lot of people still to Southern Missouri. So we are still going to see that huge influx of people really for a handful more years, I think, while we're kind of going through this. I mean, what is this? It's like the great recalibration of our country. I mean, it's historical. I just want to say, obviously, COVID was historical. I never thought I would see that. That was pretty wild. But now, we're still feeling the wake and all the movement that's come since COVID, where people are ready to make huge changes and huge decisions, really wanting to align with where they live, as closely align with the government and have the least amount of encroachment of government in their life, and also feel like they're around like-minded people. And I hear that every day from people who are moving and coming here to Southern Missouri. I really want you guys to stick with me till the end of the video. I kind of want to expose all of the fear-mongering about the real estate market crash, and I want to show you how a lot of it is, I don't want to use a bad word, but it's bunk. Now, one, saying that, do I recognize that our whole economic system is a house of cards? And, truly, if the puppet masters wanted to collapse it, could they? Yes. Would they potentially risk losing power and we kind of, de-evolving, or maybe some would say evolve to kind of like rogue, tribal, regional living? And yeah, I think that there's some argument there of why the powers that be don't want things to go Mad Max, okay? But saying that, I recognize that it could at any moment. But the truth is that, so many videos said that we were gonna see the worst real estate crash ever in 2023. Now, we did see a slowing of the market that statistically, that analytically was on scale as 2008, okay? And that's big news, okay? But did we see a collapse of prices like we saw in 2008? No. We actually saw prices year over year increase in 2023, and in some areas significantly. So while there can be some comparisons to at least the volume of sales as 2008, I'm very tentative to call 2023 a crash, okay? So saying all that, I want to show you some clips of videos because there's clips being recycled, and every year, literally for like the last 10 years, they've been saying, this is it. This is the biggest real estate crash since 2008. We're done for. No one's going to survive this year. I mean, the most, just absolutely hyperbolic statements being made on these YouTube videos, and they are freaking people out. I actually got mad. And someone who I've actually really enjoyed their videos, Robert Kiyosaki, Graham Stephan, some of these big names, I have enjoyed some of their videos. I do believe in stacking precious metals. Why not? It's a good idea. I love that Missouri is trying to pass the legalization of precious metals as a currency. All of that is amazing. But where I really felt frustrated and want to step away from some of these big names in YouTube is the fear mongering, the clickbait. And it's actually not okay with me that there's people who, through that fear mongering, are going to be, scared out of the market. And is it going to get easier for them to buy the next year? No. Are prices going to collapse the next year? No. They're going to continue to rise, making it harder and harder for first-time home buyers. So the fear mongering is actually, it makes me mad. Sorry for that rant, but I do want to show some interesting clips exposing it at the end of this video. I don't want to be redundant because I kind of was just talking about it, but once again, the third consideration is prices continuing to rise. I think that surprised a lot of people, and really, okay, so when you're looking at the real estate market, you have to realize that all the different factors feed into each other. So 2008 was special in particular because we had really a flooding of the market. Remember, all the subprime loans, and people were going just belly up on properties. It was crazy, right? And so you had a flooding of the market, and it was in conjunction with other economic suppressions, demand dropping, inventory increasing, and all of these things play together. So if you want to understand 2023, and really if you want to understand what's going to continue through 2024, and I believe 2025 as well, is that we have interest rate issues, right? And so that did really slow the market down. But what kept prices high was that inventory is still, historical lows. And so the issue is that for the desirable properties, okay, so if a property has sat forever, and there's kind of this a little bit, it's starting to feel at moments like it was a buyer's market-ish, that's when there's still good deals to be found. And, I have an investor mindset. I work with investors, and so when it comes to getting the best deal, you really need to find properties that have sat, where there's motivation. All of those things lead to sometimes incredible deals, even in tough markets, where prices are holding out. So, saying all that, we have that equation that's going to continue to keep prices stable and to keep prices rising, which is incredible low inventory. And then you look at a market like Southern Missouri, and we have, such a significant and consistent influx of people moving here. So as you can see, we're kind of painting a picture, right, for what this market is. We've got crazy low inventory. Like, people are saying this is, never in their lifetime have they seen something like this, right? Crazy low inventory for our region, increased demand, and then also, really that it's truly still a bit of a seller's market because of that low inventory. People know that what they have is short supply and that they can hold out for their price. Maybe it will take a little bit longer. Days on market did increase. We are at roughly 45. It kind of got to like 55 average days on market, where previously it was half that. And so those are big factors of why we are going to see prices stay high for most properties and not budge. We're going to see sellers be pretty firm, and we are going to see inventory fly off the shelf. And I do want to talk about that in my last point. So these factors continued in 2023. To tell you the truth, I think they're going to even be a little bit more accentuated in 2024. A little bit tighter inventory because the demand is going to be increased, and that's going to be probably considering our next point of why we're going to see an even bigger increase in demand. So demand stayed consistent for the most part in Southern Missouri just because we've got so many people moving here. But there was a slowdown, and a lot of people that still stayed on the sidelines because of interest rates. And I can't tell you how many people are just waiting on those sidelines. Some people say that those numbers are historic because we have a huge amount of millennials who have reached that 33, that the beginning of like the prime first-time home buying age. We've got this abundance of millennials, and then we have this huge generation, baby boomers, and so many of them, they've worked their whole lives in a state that they don't agree with politics, or they want to feel like they can retire somewhere and enjoy the fruits of their labor for longer. And so there's this huge just kind of changing landscape with all of those dynamics. You've got just so many first-time home buyers in the sidelines, and then you had a lot of baby boomers who were in states that it's harder to sell homes. California experienced some serious slowdown all throughout the state, Northern and Southern California, selling real estate. So we're going to have all that again in 2024, but it is going to change a bit because we are going to have, it looks like maybe 6 adjustments of the interest rate. We might see an interest rate decrease, somewhere between 3 to 6 times is what people are guessing. So that is every time we do that, and every time, the media puts out that interest rates are going to continue to drop, and that is going to change the psychology of buying, because so much of it is psychological. Actually, when you crunch the numbers, buying sooner, even with high interest, really does save you more money than continuing to wait, because equity is going to outpace interest every day. Okay, so unless you're finding, the perfect property that you get for a steal, and you can wait because no one else wanted that property, it's not desirable, and you're going to put in the sweat equity to make it what it is. Like, there's always those stories, but in general, waiting does not save you money regardless of interest rates. But this year, we are going to see, people say maybe down to 5 3/4. That's crazy, but definitely, there's a lot of conversation about interest rates getting down to 6. And I also want to bring up that historical averages. So if you actually take the average interest rate over a long period of time really is 6.5. So we're at a pretty I know it seems crazy, but we're really at a fairly reasonable place. And we are nowhere near the insanity that people lived through in the 70s and 80s with, the 10, 12 and above, and 15. I've heard stories of 15%. I've heard stories of 18% for commercial properties. And investors were still crushing it. So if they can do it then, I do believe we can do it now. It definitely hasn't stopped us. We are planning on probably in one more year, we will have, the capital gains tax issue will be taken care of, and we're going to trade up. And, interest rates really aren't going to stop us because we're building a long-term goal. And so we know that eventually we'll refinance if necessary, and just always making sure that you can cover your payments. And we're the type of people that sometimes, to propel ourselves forward, we just pick up another job. I know that that's not popular always, but that's, we always have multiple jobs. So yeah, I think that really motivation is going to be probably the most important factor in buying. So kind of like a second point to make with point 4. So remember, the fourth consideration is that interest rates are going to be decreased. It sounds like we're going to continue to be on that trend, which is going to spike demand even more, right? That's connected to our previous point of demand continuing to rise. But there's something that 2 lenders have told me that I think is super important for first home buyers to hear, which both of them said that although interest rates are going to be decreased, we're going to see an increase in the rigidness around loan requirements. I think that is really important for first home buyers to know and to start planning now. One of the lenders that I talked to said that what was going to become even more stringent is credit scores, debt to income ratio. And so for first-time home buyers, maybe, more than ever, it is so important to do like your preparatory work, your preparatory financial work before you go out and get that loan. So, maybe that means chunking out some debt. And I get that that's hard. Like right now, I want to buy an investment so bad. And we've been talking about just kind of doing it before other, maybe more responsible financial decisions of chunking out some debt. And it's a hard decision to make when you're really chomping at the bit to buy real estate. But sometimes, you got to pump the brakes and you got to do A before you move on to B. So what I would tell the first-time home buyer, or really any home buyer looking to have a loan in 2024, is really make sure that your financial snapshot looks great. Raise up your credit score. The best way to have a high credit score is to, of course, keep your credit cards only at 10 to 30% usage, which I have my moments with that. And to really make sure that you have diversified loans. One thing I tell people, so I still have student debt, which sucks. I got a master's, huge mistake. I'll never use it, but I've got one, but I'm still paying for it. But I don't have a car loan, but it's good to, maybe you have a car loan or student financial debt, and even a small personal loan. So I have heard from people that they just took out like a $2,000 loan and made those payments. And just having that loan diversification, meaning you have different types of loans, looks really good on your credit score. In fact, I think loan diversification is like 20 to 30% of your credit score. I forget. Somewhere in there, maybe it was 20%, but it's significant. So first-time home buyer, before you get ready to buy, make sure that your financial snapshot looks really good and that lenders are going to go through your numbers and be pleased. The 5th consideration that I want to bring up is that competition is high. Now, I know that we've kind of already talked about that. We've talked about different ways that demand is high. We've got significant migration to southern Missouri. We also have interest rates that are going to go down, and low inventory means that there's more people fighting over a smaller amount of property. But all of those things together bring up my 5th point, which is that competition is incredibly high. So one, if you want to buy in 2024, start getting all of your ducks in a row now, ASAP, right? You don't want to wait until you find the perfect property and then realize that you need to reduce consumer debt, or that, you know, you needed to bump up your credit score, do that work now, because that takes a few months anyway. It's amazing what you can do in 3 months to even just your credit score. So the reason why is because competition is high, inventory is low, and properties are still going to fly off the market. I want to share a story that will highlight just how quickly properties are selling. Even now, just in January, beginning of January, it's not, you know, the hottest market time. So I imagine when we get to spring, it's going to be very quick for the desirable properties that are priced right. We went live with this last listing I had in January 1st. We had our first full price offer January 3rd. We said no to it because it had a contingency and it was just a little dicey. The contingency didn't make us feel super confident. We rejected that offer and we had the next full price offer in January 6th, which we accepted. And yeah, so not even a full week on the market and it's January. I'm seeing definitely an uptick like this, not for the properties that are overpriced and the sellers are really firm, and not for the properties that are just terrible. But and also, you know, of course, luxury takes longer and the bigger ranches and farms take longer because that's just a very small buy box. But in general, like, you know, your average to maybe a little better than average single family residences, they are going to sell so quick in 2024. There's some people hypothesizing that inventory is going to be even tighter. So that's going to be interesting to see. I want to do a deeper dive into analytics to give you a better idea of the market right now. So currently in the Southern Missouri MLS, we've got 2,775 active residential listings, which is more than half of normal averages. So it is not a huge amount of properties that are active right now. From those, okay, we have 1,122 that went pending, and nearly 30% of those went pending from January 1st to January 10th. So that's significant. That means that there's definitely a big uptick in sales and pending properties in January, and we're definitely not at the peak of the season yet, so it's just going to continue. So this is really important for buyers to know that, you know, you've got to do all your preparatory work, looking at, you know, all of your debt to income ratio and your credit score and getting all of your ducks in a row. Maybe it means making sure you get on your taxes this year. Whatever it is that you need to do to make sure that you're ready to apply for a loan if that perfect property comes up, because it's going to be a bit of a feeding frenzy. It's going to be a lot of people trying to get a little bit of property. You know, there's just not going to be tons out there, and there'll be a lot of competition. I appreciate you guys staying to the end of the video. As I promised, I want to show you guys some videos that are being made right now that are being, you know, very hyperbolic. You know, 2024 crash, it's imminent. You know, people will not survive 2024. Everyone's going to lose their property and go starving. I mean, really bad titles. Like if you start to look through YouTube, like just put up like real estate, put in real estate collapse 2024, and you will have endless amounts of videos that you can watch. And so I'm going to show you this first clip, which is Warren Buffett.
This is the 2006 Berkshire Hathaway meeting, and Buffett really is predicting a real estate recession because this is predating 2008.
In my view, you're likely to see the greatest fall off, and where you've had the biggest bubble are the ones tend to be the high-end market, and they tend to be ones where people have bought for investment or speculation rather than use.
Ironically, here is that same clip in 2024 being recycled for well over 10 years, every year claiming that it's proof, and Buffett is predicting the next real estate housing crash.
In my view, you're likely to see the greatest fall off, and where you've had the biggest bubble are the ones tend to be the high-end market, and they tend to be ones where people have bought for investment or speculation rather than use.
Ignoring all of the fear-mongering that's done in his name, Buffett himself said he would invest the same regardless of recession.
I can't predict recessions. If you guaranteed me there would be a recession next year, I would be buying and selling the same securities I'm buying and selling today.
Total people who recognize that negativity and clickbait works. And, whatever, they're making, $10, $20, $30,000 a month on ad spend with their YouTube channel. They just want you to click. And they're going to put something terrible. And here's what makes me mad is that there are some people, especially the first-time home buyers, that are going to get freaked out by this. And I have friends who've wanted to buy for a couple years now, and they're waiting for the market to crash. And you know what I saw? I saw equity grow at least by $50,000 in properties that they could have acquired 2 years ago. And they're just losing money. They're not going to save money waiting for this crash. They're losing money because equity is seriously spiking every year. Notable increases in real estate prices. So that's why these videos make me a little bit mad. We are at the end, and I want to thank you for joining me. I want to thank you for the likes and anyone that subscribed. It really matters in this whole YouTube realm. And I also want to remind you, all my information is down in the description, and feel free to give me a call for any and all real estate needs, whether it's a small deal or whether it's a multi-million-dollar deal. I want every client to feel like they're getting red carpet. And I want everyone to feel really like their family. All right, you guys, till next time.